Hey everyone, today we'll discuss the difference between a financial analyst and an investment banker. You may already know from my previous videos that I'm a financial analyst with diverse experience. As a financial analyst in large companies, I gained significant experience working on M&A deals alongside investment bankers. I have a solid understanding of both positions and their distinct requirements. Today we'll compare the primary responsibilities, necessary qualifications, and expected salaries of financial analysts and investment bankers. Following this, I'll offer guidance on the ideal role for you. Hope you're ready. Let's go. What can we say about the responsibilities of a financial analyst? If a business doesn't operate profitably, its activity is not sustainable in the long run and is destined to fail. To prevent this, top management must focus on the profitability of core operations and constantly study new developments. This is why traditional businesses need financial analysts. They help management understand which operations are profitable and how different activities impact the bottom line. Financial analysts will closely examine revenue development and growth rates, sales, and profitability per product line, client, and geography. They assess the financial impact of different company business lines, develop balance sheet items, and assist with budget projections, particularly in smaller firms. On the other hand, investment bankers engage in very different activities based on the division they work for. We can clearly distinguish between capital markets, M&A, trading and brokerage, and asset management. The specialization and skills of someone working in M&A could differ significantly from the ones of a trader. If hired by an investment bank's capital markets division, you'll assist companies in raising funds through equity or debt financing. Next, we have the advisory side of the investment banking business. Bankers in this area tend to consult firms on M&A or restructuring. M&A deals, often headline-making, require investment bankers to purchase and sell companies. In these transactions, bankers are classified as either buy-side or sell-side. Trading and brokerage involve purchasing and selling securities using an investment bank's own money or on behalf of its client. Finally, the asset management arms of investment banks are responsible for managing clients' money. This profession is more nuanced than the financial analyst role, so when one says investment banker, they can mean many things. So, what qualifications are required to land a job as a financial analyst or investment banker? Both positions are suitable for entry-level candidates. A financial analyst typically has a bachelor's or master's degree in a finance-related field such as finance, accounting, or business administration. Here are some numbers from our research. 25% of financial analysts have a finance degree. 17% hold a business administration or management degree. 14% have an accounting degree, and 10% boast an economics specialization. Investment banking attracts those with finance degrees, often at the master's level, whereas financial analysts commonly start with just a bachelor's degree. Moreover, investment banks often recruit candidates with math, statistics, computer science, and engineering degrees, particularly for quantitative roles. Regarding qualifications required, investment banks look for candidates with outstanding resumes and academic performance. They often hire from certain target schools only. Consequently, securing a position as a financial analyst is simpler due to the abundance of openings and less stringent hiring criteria. If you wish to become a financial analyst or an investment banker, adding 1 or 2 solid internship experiences to your resume will be helpful. I'd say that 90% of successful candidates have prior relevant internship experience, especially in investment banking. What skills are essential for becoming a financial analyst or investment banker, and what should you know before starting the job? A financial analyst must have a firm grasp of accounting, which is essential to learn early on. You must learn to record debits and credits, prepare financial statements, and compute a P&L, balance sheet, and cash flow. In addition to accounting, proficiency in Excel is essential. You'll need to be able to turn raw data into 3-statement models or well-presented financial analysis. Excel is also where you'll perform all financial analysis. You must know how to calculate margins and year-on-year growth, create charts, and group data meaningfully. If you want to become a financial analyst, the courses and projects on our 365 Financial Analyst platform will ensure you'll have all the necessary training before spending a day on the job. Master building world-class reports with pivot tables and functions, create three-statement models, and learn to calculate and interpret growth rates and financial ratios. Investment bankers require solid Excel and PowerPoint skills. Mastering these tools can significantly ease the famously long hours spent on the job. Excel is used for financial modeling and building valuation models. You need a solid understanding of accounting, corporate finance, and financial math principles to engage with these. The 365 Financial Analyst program extensively teaches all these skills, and we're happy to help you acquire them. Lastly, let's discuss the expected salaries for financial analysts and investment bankers. Currently, Glassdoor indicates that the estimated total pay for a financial analyst in the U.S. is $108,439 per year, while the annual salary for a junior investment banker is around $110,000. Bonuses can add up to 50% to it, so it can reach up to $165,000. Investment bankers earn significantly more than financial analysts, but the requirements and expectations are also higher. Right, well, that wraps up today's video. I hope you've enjoyed the content. Please like and subscribe to get updates about other career-related videos from us, and thanks so much for sticking to the end.